All right, let's talk about a company called NJ. Now, for 7 years running, they have been the undisputed #1 player in the world for a component that is absolutely essential for every single electric vehicle. By all accounts, these guys are at the very top of their game. But here's where things get really weird. How can the world's #1 company, a leader that's selling more and more every year, be losing money? And not just a little. We're talking about bleeding cash and posting massive losses. It doesn't make any sense, right? Well, that is the mystery we are going to unpack today. And this really puts the paradox into sharp focus. Just look at these two numbers from the first half of 2025. On the one hand, their revenue shot up by over 20%. Fantastic news, you'd think. But then, look at the other side. Their net profit didn't just drop. It completely cratered, plummeting over 130% deep into the red. So they're selling way more, but ending up with way less.
So, what on earth is going on here? To get to the bottom of it, we have to start on their home turf, the company's massive domestic market in China, because that's the epicenter of this whole crisis.
Okay, the first major clue is just a total collapse in their profitability. In the second quarter of 2025, their gross margin, that's the direct profit they make on their products, fell all the way to just over 14%. For a high-tech manufacturer, a margin that thin isn't just a red flag, it's a 5-alarm fire. And, when your margins get squeezed that hard, this is what happens. A net loss of 119 million RMB in a single quarter. This is a complete U-turn from the healthy profits they were making just 1 year earlier. But honestly, this next number might be the most dangerous signal of all. Operating cash flow, the actual cash coming in from the business, it fell off a cliff, down over 86%. Think about that. Sales are up, but the cash is just disappearing. It's the classic definition of profitless prosperity, and it's a terrifying place for any company to be. This table just lays out the entire disaster. Revenue is up nearly 24%. Great, but then the wheels come off. The gross margin gets almost cut in half, and a nice, healthy 133 million profit turns into a 119 million loss. When you see numbers like this, there's really only one explanation. It's the clear signature of a brutal, all-out price war. But just when you think this is a simple story about a company in a death spiral, there is a massive twist. Because while NGG is fighting for its life at home, its international business is telling a completely different, an incredibly profitable story. So first, let's get some perspective. The overseas business makes up about 20% of the company's total sales. So yeah, the domestic market is still the much bigger piece of the pie. But, and this is a huge but, as we're about to see, not all revenue is created equal, not even close. And here it is. This is the core of the whole story. The gross margin on their domestic business is a razor-thin 10%. But overseas, a whopping 37%. It is nearly 4 times more profitable. This international segment isn't just a part of the business. It's a high-powered profit engine that is literally keeping the company afloat. And listen, this isn't some temporary stroke of luck. This international profitability is locked in. NG has these massive long-term contracts with global giants like LG Energy Solution and a major US automaker. They're so all in, they're actually building brand new factories in Hungary and the United States just to keep up with these super profitable deals. So how do these two completely opposite realities, the nosedive at home and the boom abroad, actually fit together? Well, the answer is, this isn't happening by accident. It's all part of a deliberate and incredibly high-stakes strategic gamble. So here's the playbook. NG's taking those healthy profits from its overseas business and using them to fund a brutal price war at home. The goal? Drive the smaller, weaker competitors completely out of the market. If they can pull it off, they'll be left with something close to a monopoly, allowing them to raise prices and control the market in the future. Now, as you can imagine, this strategy has split everyone right down the middle. This is the core debate. Is this just a painful, temporary, cyclical crisis that Angie can power through to become even stronger? Or is this a structural injury, a self-inflicted wound that permanently destroys the profitability of the entire industry, including their own? The optimistic view, the bull case, says this is a brilliant, if painful, move. The argument is that Angie's sheer size and cost advantages mean it can simply outlast everyone else. Those overseas profits act like a war chest to fund the battle at home. And once the dust settles, their status as a global champion will be completely untouchable.
But the pessimistic view, the bear case, sees a company walking a tightrope. The fear is that NG is falling into that classic trap of winning the market but losing the company. The severe cash burn could lead to a real financial crisis. What if the price war drags on for years? What if those big overseas factory projects hit delays? The risks here are just enormous. So which side is right? Well, instead of us making a call, we're going to give you the tools to watch this whole thing play out for yourself. Here are the key signals that are going to show whether NG's massive gamble is paying off or if it's about to blow up. First, keep a close eye on that overseas business. Is its share of the pie growing, and can it hold on to that amazing 37% margin? Second, watch the prices in the domestic market. If they stop falling, it's a huge sign the war is easing. Third, cash flow. It absolutely has to recover from that 86% plunge. Fourth, look for progress reports on those new factories in Hungary and the US. And finally, watch for news about smaller competitors going out of business. That would be the clearest sign that the strategy is working. So there you have it. The story of NG is really a tale of two companies in one. One is locked in a brutal, profit-destroying war at home. The other is striking gold abroad. The entire future of this global champion really depends on which one of these stories ends up defining its destiny. It's a high-stakes drama, and it is far from over.